Welcome to the Polaris Trading Group's PTG University Educational Series. In today's video, we'll discuss some trade setups that occurred this past week in crude oil, specifically on November 13th and 14th, 2014. And the chart types we'll be using today will be two, 900 volume for a larger degree view, and a 300 volume for a more detailed view of execution. And the trade platform today we'll be using will be Sierra Chart. And just to review some disclaimers, trading in securities and options on futures may not be suitable for everyone involved. Risk of losing part of all your money. And the commentaries here are educational in nature and designed to contribute to your general understanding of financial markets, technical analysis, futures trading. And past performance is not indicative of future results. So with that, let's get to the 900 tick chart and review what occurred here on November 13th this week. Okay, so what we have up here is a 900 volume chart of the crude oil December contract. And as many of you know that trade crude oil, and this past week or so has been quite tumultuous on that. Crude oil has been in a very strong downtrend, and so what we want to do here is simply take a look at some of our trade setups that occurred this past week, November 13th and 14th, and let's just take a small detailed view of various trade setups that we have in our methodology, namely premium and discounts, bull and bear stackers specifically. So what we want to just highlight here initially on the 900 volume, which is our larger viewpoint, going into the 13th of November here, was on the 12th, okay, price had pushed up and made a double top high. Okay, so many of you that trade these double tops are looking for new signs of weakness. And that weakness came in, all right, we're using our ATR, proprietary ATR stop line, which is what we call our structure. We had a point break at this juncture right here. And that point break signified weakness in the contract of oil. Now the final breakdown didn't actually come until it took out the low pivot here. But what we're looking for is signs of weakness and signs of strength. And so when we received a sign of weakness, all right, it sets our tactical trade strategy to the short side. So let's just walk through the transition here and looking at the opportunities that that price gave us. So with that initial weakness, price consolidated just a touch, and then we got a real clean setup, and you can see those double arrows there, those double white arrows. Those signify premium setups, and that's essentially pullbacks within the context of a developing downtrend. Our fair value zone between the 34 and 89 EMA was certainly pointing to the downside now. So there was a shift that occurred, a structural shift, and then now the tactical trade strategy was on the short side. So we had a couple great opportunities here early in the move up at the 77.40 zone, and then as you can see, price pushed down, and then that star that you see here represents what we call a 200 extreme reading, and that is strong downside momentum. Okay, so following that, we get another opportunity on a pullback within the context of a developing downtrend, another premium opportunity there, as you can see, and again, our software automatically highlights the signal in real time. So there was another one there, approximately the 76.90s on the retrace. And then further along on the 13th, strong trend continued, and again additional premium opportunities continue to occur in this very strong downtrend. And as you can see, again, these stars occurring at the low ends, these are momentum. All right, this signifies strong downside momentum, and it was not at any point at this time at any chance to be dissipating. So there was no, the downtrend was very, very strong, no opportunity for reversal. You do not want to be buying in the context of a strong downtrend. Okay, so continued downside momentum, and as we'll see as we enter into the 14th of November, price finally hit a specific zone, what we call our statistical X zones, or stat X for short, and we'll see how price at that point found a low and reversed. So up until this point in the context of the 13th, strong downtrend with multiple premium signals, and this is a core part of our strategy. We want to get a premium represents a pullback, statistical pullback within the context of a downtrend. So the big question is always, where can I get into a trade on a pullback with the lowest possible risk profile with the greatest possible potential for profit? And our premiums statistically measure where that point is. So let's move on to the 14th, and as the transition from this strong downtrend line to the final low for this past week, and then a subsequent bounce. Okay, so I've just advanced the chart just a touch into the 14th, and as you can continue to see, there were still strong down momentum. We had another premium here, okay, and again with additional signs of momentum weakness with these asterisks, these stars. And then what I've added to the chart here is our stat X zone. Now these levels here, this blue zone with an X, are automatically painted on our chart in advance before price reaches that. These represent statistical extreme zones, and so we're looking for opportunities for reversals from those zones. Now as you can see here on the 13th, all right, price entered an X zone, did bounce a little bit, but this trend was still very strong. So the price had not yet capitulated to the downside, had not flushed out everybody. Finally, though, on the 14th this week, we got a very, very strong flush. And again, more downside momentum, stars, but you can see in this last one here, simply concluded, and then price finally found a low, which it bounced. Now, what we want to be looking for here is, we're going to focus a little bit here on Friday's action, the 14th, in a little bit more detail about how to trade the reversal. Now, what we don't want to do in trading reversals, we don't want to try to pick a low, although we want to identify statistical extreme levels where price may stop and reverse. But we want to let the market tell us that in fact a level is important. We don't want to try to guess. The more we try to speculate guessing where prices are going to stop, we just have added risk that simply is unnecessary. What we're simply looking for is, we're looking for levels to reverse from, and then when the market finally gives us a new sign of strength in the case, then we'll look to take a long position. Okay, so this is what happened on Friday this week. All right, early in the morning, we got a final flush out, and then price, as you can see, reversed. And now in this particular case, there was an actual sign of strength. There was a change in the character of price. As you can see on the 13th, price kept very strong in this downtrend, and that yellow line is our ATR structure line, and price was never able to penetrate it on the way down. So that kept the downtrend very much solidly intact. What happened though here after the final flush into the stat X zone, price was able to move above the ATR line and actually shift it. So that becomes our first sign of structural strength entering price. It's at that time then when we want to be looking for pullbacks, okay, in a potential new developing up move. Now we don't know at this juncture that in fact price is, going to move up as it shows here in the chart. Again, we don't have that future information, right? We all wish we did, but we don't. What we do though want to do is say the market appears to be flushed out. We have new evidence that there's enough strength to change that ATR line, right, and then shift the market in what we call a bull stacker developing transitional formation, a bull stacker formation. So it's the initial thrust off up the low, enough energy to shift that ATR line, and then ultimately shift our fair value zone from a bearish formation to a more early bullish formation. So that occurs in this area here. So what I would like to do here at this point is focus a little bit closer on this transition zone using the execution chart and looking for opportunities and how we were able to trade those during Friday's session. So what we'll do is we'll switch over to the 300 volume chart. We'll look specifically at the same area here coming off this low, and then as the trade opportunities unfolded through the course of the day on Friday. Okay, so now we're on a 300 volume chart, and this is, I'm just drilling down into the area there we just spoke about in terms of the statistical X zone where price finally found its low. And as you can see here, right at the end of the stat X zone was the session low on Friday at 73.25. So it hit right to the tick. Now, doesn't always do that, but in this case it actually did. And then as we were mentioning on the other larger degree chart, price rallied strong enough to shift the bear ATR line, that yellow line, over to the bullish. So I've put a vertical line to denote the actual shift. And as you can see on that shift and on that price rise, we had a new momentum high, a 200 extreme momentum high in our oscillator with that star. So that tells us that there is enough strength, okay, now shifting the price. So all the sellers are finally sold out. And then this is where we want to be looking to enter new trades. And the new trades here will be identified as simply a bull stacker transition trade, which is, you can see this area of cyan colored bars. Okay, that is a bull stacker transition. So essentially coming off the lows, new strength, and there's a period, sometimes longer, sometimes very short, but there's a short period of time where price consolidates a little bit off this low. New buyers start stepping into the market. Old shorts feel the pressure now to have to cover. So you have old shorts, old business needing to cover. They become buyers. New buyers or potential buyers looking at this price action, price structure, and saying the sellers are done. Now it's clear to buy because my risk to go long now has been greatly reduced. So this becomes the opportunity for us in this zone on a pullback to look for a buying opportunity. As you can see here, one of the trade setups that we like is our first pullback, and then we get a discount signal. So 73.99, you can see again these things fire off live, all right, and that becomes our opportunity to take a long trade. So we would simply, our traders would take a long trade coming off this pullback low here and enter approximately where I put that diamond. Okay, so that becomes the first long trade. So now the bias of the market now has no longer short, but rather long to buy pullbacks. So as it continued to develop on Friday, the market held up pretty well, and as you can see, there was additional transitional buying on pullbacks here with these white arrows. So these white arrows, again, are pullbacks within a developing uptrend, and those would be the points coming off those lows. All right, so let me just mark those there. We could buy one over here, we could buy one over here, and then continuation discounts are the blue arrows, and those are a little bit minor, not as significant, but they are still opportunities to buy. So we had a couple additional opportunities to buy here, again, on the way up. Now keep in mind, the price has shifted, the bias, the market, the sentiment of the market has shifted. This is not the time to be looking for shorts. This is simply the only time to be looking for longs. And simply we're waiting for our pullbacks within the context of a developing uptrend, and that gives us our discount signals. And so as the ultimate the day continued to unfold, as you can see, our software continued to give very strong opportunities, all right, to continue to buy. Now also, as we saw in the downtrend, all right, make note that these stars, 200 extremes to now to the upside, 200 extremes now to the upside, 200 extreme now to the upside. So the pressure was now clearly shifted back to the upside, and we would be simply looking to buy pullbacks within that context of a downtrend. So our software gives us these signals automatically. We just need to be biased to trading with the trend, with the developing move, and not fade it. And then finally, a little bit later in the day, price pulled back and held very nicely a pullback right into the VWAP, okay, volume trend right here, this yellow line. So a nice pullback into that. We did have a couple premiums here on the corrective move, which certainly could have been played for those aggressive traders in here. But once we hit that VWAP, okay, the volume trend, and then we got an additional bullish shift here. At this point, all right, new strength came into the market, and ultimately the game was on once again back to the buy side. So as the rest of the day unfolded on Friday, okay, you could see very clearly, again, additional buying opportunities on discounts, all right, within the context of the uptrend. There was a small pullback here about mid-afternoon Friday going into settlement, all right, which held a prior pivot level, as you can see here, and I've put that dashed line to denote that. Okay, and then finally, as the day concluded, all right, we got another shift, and this was a real classic one that we like to play off of. Again, price pulling back to a key level, key decision point level. Buyers coming back in, new swing high, new momentum high. Again, 200 extreme star gives us that signal. Followed by a shallow pullback, gives us a bull stacker. Okay, and as you can see there, all right, going into the final part of the session, 75.57 on the discount alert. And again, these are live signals that our software generates. And here we go. You simply want to be taken along on the entry, all right, following that alert. And then the momentum, of course, all right, pushes price up into the high of the session there at 76.30 before settling out. So this is a trade review from November 13th and 14th in crude oil. All these signals that you see here generated automatically by our software on the Sierra Chart platform, NinjaTrader platform, and TradeStation platform. Okay, so if you would like some additional information, you can contact me at david@polarisTradingGroup.com, And if you're interested in taking a 7-day free trial, please come in and visit our website at polaris.trading.group.com /free trial, and simply sign up for a free trial, and we'll show you what we do. And hope this video was helpful, and good trading to everyone. Thanks very much for watching.